Hey, and welcome back to Home Loan Basics, episode number 2. We are going to talk about FHA loans today. I got the good brother, Greg Lewis here, the mortgage gentleman from Fairway Mortgage. How you doing today, sir?
Doing well, Cedric. It's a pleasure. Thank you for having me again. I'm super excited for today's talk.
Yeah, as we know, this information needs to get out to the masses, so I'm glad that you were able to make time. And I'm looking forward to us really digging into some of these other elements regarding home loans and, the different types of loans, all the things that people need to know. It's just so much information that we got to break it up a little bit, So
Oh yeah, oh yeah,
right,
oh yeah.
in this one, I think we'll do pretty well in regards to FHA, but again, there's so much more. So folks, stay tuned because there will be additional videos. But this is episode number 2, and this is all about FHA. So let's start with what some of the basics are to dispel the myths. We always want to make sure that people are getting good, clear, concise, correct information about these
Absolutely.
products, right? So uh, first and foremost, just for those who don't know, what is an FHA loan?
Sure. Great. That's a great starting point. FHA loan is a government-sponsored loan throughout the country, meaning that it's not tied to a particular state. You can absolutely live in any state in America and be pretty much eligible for this loan. Of course, assuming that you meet other requirements such as credit score and just assets, things of that nature. But at the very basic level, FHA wants to promote home ownership throughout the country for your primary residency.
Yep. Okay. You did mention credit score, so I guess we can just talk about what the requirements will be in a moment. Now, FHA loans, is that a first-time homebuyer loan? Is that like the loan of choice for first-time homebuyers,
You
or
know
no?
what? You know what, Cedric? I think that's a big misconception. It's normally associated with first-time home buyers, and a lot
Right.
of people hear that because really, I would explain it as you don't have to have perfect credit to become eligible for a FHA loan, but you do have to show a likelihood of you paying your bills on time. What that means is, or the reason why it's associated with first-time homebuyers, because of that reason again, right? It's you hear it associated with again folks that don't have perfect credit, or maybe younger folks just getting out of college. Really, it's again FHA wants to just give you an incentive, uh, promote home ownership. It's also more likely and just very popular with affiliation to first-time buyer assistance programs such as down payment and closing costs. But to answer your question, no, it is not for first-time buyers. It is for repeat buyers, but it's really for anyone looking and eligible for a primary residency.
Wait, so you're saying that someone can be purchasing their second or third or whatever home that is not their first home and still utilize an FHA loan? How does that work?
Yeah, absolutely, absolutely. So there's one distinguishing factor, and it's really big. You cannot have more than one FHA loan at the same time, right? So you can use it once, all right? You pay your loan off or you sell your property, but you are eligible to do it again, right? If you're not eligible for a conventional loan or VA or USDA, or so have you, you can be eligible to pick up another FHA loan as long as that prior existing FHA is satisfied.
Okay, so John has a house. He's selling the house.
Yes.
John needs to live somewhere after he sells the house, so he needs to buy another house.
Yeah.
On the current house that he owns, he has an FHA loan.
Yeah.
John loves FHA loans. Would love to continue to have FHA loans, but he needs to get out of this house, right?
Yeah.
So how does how does that work for John?
Yeah. For John, John needs to sell that that current home
Mhm.
prior to settlement of the next purchase. All right. If it's going to be a FHA, again, that current loan under FHA has to be satisfied. All right. There's no if, ends, or betweens. All right. That loan has to be satisfied, paid in full before moving on to the new FHA loan.
Um, I don't, and this may be more of an attorney-related question,
Yeah,
but I don't recall. What's the duration of time between those two? Like same day,
yeah,
week, month? What? How does it work?
yeah. From our what we well, there's no really formal guideline here, but I would say generally, if it's somewhere between 30 and 60 days, then normally a buyer is good. All right? And there's usually no surprises and humps in the road.
Hmm. And if they attempted to do it sooner than that, then no
Yeah,
guarantee.
it usually just causes a lot of confusion.
Challenges. Does it need to? Do you know if it needs to like be recorded first or something like that?
Yeah. Great point. Great point. Yes, title. I mean, everything has to be cleared from the title insurance for the title deed. Everything has to be removed. The
Oh,
loan has to be satisfied and recorded.
I see. Because if not, then it would show two.
Yeah,
Well,
absolutely.
I get that. I wish that things moved a bit quicker, but if that is in fact the way that it works, that makes
Yeah,
sense because you do need time for the loan to be satisfied and for it to
yeah,
be reflected in the records because
yeah,
they're going to do certain checks and balances when you're going through the final approval process for the
yeah,
purchase. And
yeah.
they can't very well see you have an FHA loan on the books. Is that what I'm hearing?
Yeah, absolutely. And I mean, you bring up a great point as well. The goal is always to make the loan process as smooth as possible. All right, from the initial sale of the current home to the next purchase. If it's too short, and like you mentioned, those recordings of title, the loan, everything it just leaves more room for error once it's too close. So my recommendation, at least 30 days in between.
Okay, well, that lends itself to some additional conversations in this market
Yeah,
because we work with a lot of people that have to sell a home and buy another one.
yeah.
We've done very well with that. That magic trick I call it,
Oh yeah.
and people don't want to move twice. Is what I think.
Yeah,
That's
yeah,
that's that's what they always say. I don't want to move twice, but you also don't want to be homeless. You also
yeah,
don't want to not get the home that you really want. So
yeah,
if this is what it takes in order for you to get where you need to go,
yeah.
then we need to have a conversation and take a look at how we can increase our flexibility here
Right,
so that we can
right.
really
Exactly.
meet the goal.
Yeah,
Hmm. Okay.
yeah,
All right. So you can't have more than one FHA loan. I'm looking at my notes here. You can't have more than one loan at the same time. You can repeat that. So let's talk about some of the basics associated with FHA loan. So the FHA loan, the government-backed loan, as you mentioned, what's the down payment for that one?
3.5% minimum of the purchase price.
Okay.
A lot
So
of folks get confused with that. What is the 3.5%? It's minimum requirement, yeah, meaning that it absolutely cannot be below 3.5. Right?
all right. So excuse me. So if you have $100,000 loan,
Yeah,
that means you need to contribute $3,500.
exactly. Minimum.
Yeah, and then the 96,500 remaining dollars is
Yeah,
what you receive the loan for.
exactly.
All right, and then what about closing costs? How does that
Yeah.
work?
Yeah, closing costs are normally your fixed fees, generally, not always, of course. It's your title fees, it's your processing underwriting fees, and then there's something called recordation of taxes.
Right.
Right? In simple words, that's just taxes on the sale of the house. Right. Normally, closing costs is somewhere between 2 and 3%. But even a cheaper house, for this example of $100,000, I would say is generally going to be upwards of $5,000.
Okay, we've been seeing more of a bit of an, I guess you could say, an increase lately. For the most part, we've been seeing folks estimating something that's closer to 4%, and that's kind of been
Yeah.
on the button for them lately. So we've been
Yeah.
telling folks to really, as a rule of thumb, because you don't want to be left short. So
Right. Right.
right, so we've been telling folks to just plan for at least 4%, and that is not including
Yeah.
if you have an FHA loan, that does not include the 3.5% for the FHA loan. So
Correct. Correct.
that brings us to 7.5%. So in that same $100,000 home,
Yeah.
we're looking at $7,500 that you
Yeah.
need to have for the down payment
Yeah.
and closing cost
Yeah.
in order to become the owner of that property.
Yeah. 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 I mean, the money adds up pretty quickly.
Mhm.
But like you mentioned, I totally agree. Better to be prepared than to just to be short once that initial closing disclosure comes out. 4%, I think that's a safe guiding tool, at least so buyers can know what to expect.
Okay. And so you mentioned earlier credit and things of that nature. Can you tell us about some of the minimum requirements for an FHA loan with your company right now?
Yeah, absolutely. So here at Fairway, and this is why I love Fairway, because we used to be a 620 minimum credit score for FHA loans. We have since decreased that score minimum to 600, meaning that a lot of folks that was once on the borderline, not completely ready,
Uh-huh.
maybe had a couple late payments,
Mhm.
maybe one or two collections that prevented them for getting approval through our desktop underwriter. Now these folks are getting approved. Now, and I think it's great because of the times that we're in with COVID. I think it's just an added incentive for home ownership.
Yeah. Yeah. So 600 flat.
Yes, sir. Yeah.
All right. And what about debt to income ratios?
Yeah. Great question. So our debt to income ratio limit is about 56%. Right
56?
now, 56%.
Sheesh. I think anybody that has done anything in relation to this process will know or should know that that is pretty high.
Yeah, 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 yeah. So
That's something that
yeah,
you all do. Now, I'm not hearing that everywhere. That's you all will allow 56% debt to income ratios.
yeah, 56, totally everything capped out. Now, if you are pre-approved with a 56% uh, DTI ratio, then that's like really taking a chance. That means your homeowner's insurance cannot come any higher. Everything regarding the estimates have to be exact or lower.
I see. I see. Okay. But the mere fact that that's even an option is just so
Yeah,
incredible. So, that's it.
yeah,
That's a sign of hope for some that some people need to get in and, you know, that that's a help. Okay. So,
yeah,
whew, man, 56%. I didn't know that. I,
yeah.
I'm glad I asked. Okay. So, loan limit for FHA for those that
Yeah,
like the
loan
product.
limits for FHA now, and this,
Yeah. That they're in a position where they need to use FHA versus a different type of a loan product. And I guess that would be because, you know, some of these other kinds of products just didn't make sense for them. So they go to use the
right?
FHA loan product and they're like, look, I can do 3.5%. What are the guidelines for loan?
Yeah. So FHA, it differs. It varies through counties for loan limits. Every county is different. For
Okay.
example, you and I both, we are in Maryland.
Mhm.
Montgomery County, PG County has a little higher loan limits compared to perhaps Baltimore City or
Right,
Baltimore County,
right.
right? Um, if you're a buyer and you're looking for, let's just say, a really large size house, then your loan officer should definitely be doing his due diligence with looking at the loan limits because it may require a jumbo loan, meaning that if your loan exceeds, let's just say, uh, Baltimore County, I believe is 538,000, close to that.
Mhm.
right, then it requires a jumbo loan, meaning that it's two different loans. All right, same house but two different loans to make the deal work.
So in an area like Baltimore, the limit before you get into the jumbo category is just shy of 540.
Yeah,
Gotcha.
yeah,
Okay. Yeah, I do remember that varies by area because the median home price is going to be very
yeah,
different in some areas. So that makes a lot of sense
yeah,
based on the example
yeah,
that you just gave. Okay.
yeah.
So we got some pretty good information here. Is there anything else? Obviously, uh, well, just for those who don't know,
Yeah.
FHA loans have that word, that phrase that people like to talk about so much, PMI.
Yeah, 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 yeah.
Can you tell folks what that is and how that's associated with the FHA loan?
Yeah, yeah. So the mortgage insurance for FHA, it is unlike conventional loan, unlike probably other loans. FHA requires mortgage insurance for the entirety of the loan. What that means is, Mr. and Mrs. Buyer, you're going to get a 30-year term. You're going to be paying mortgage insurance for 30 years. All right. There's no option for the mortgage to drop off. Right. Now, that may or may not be beneficial for you. But if you're looking to get a house, then I think, I mean, you will always have the option to refinance later down the road, but that's essentially what you're looking at.
So no matter what happens, if you only owe 2% left, it's not an
Yeah.
equity issue. It doesn't fall off 75% or anything like that. This is
Yeah.
FHA equals mortgage insurance. That's it.
Yeah. No option. No option.
Okay. So who is FHA? Who is an FHA loan really a good fit for?
Yeah.
Like who, generally speaking, I know everyone's situation is different, but
Right. Right.
well, what would make someone say they should go to an FHA loan? Is it really because of the down payment requirements? Like, what are your thoughts on that?
Yeah. I mean, as you said, every case differs. But I would say if it's someone, generally speaking, if it's someone that needs a primary residency now, right, and they're just looking to purchase, don't have perfect credit, but they are looking on the path to building their credit, um, and this will be their primary residency, then I think FHA is the best fit.
So if you do not have a 600 credit score, or rather, if you have a credit score that is below 640,
Yeah.
is there a would this be the best loan product for you?
Yeah, I think so. Now, if you're not a veteran, or if you're not looking for perhaps a house in a rural area, which would maybe a USDA loan would best fit your criteria,
Mhm.
then my opinion, FHA is probably the best.
Okay, that makes sense.
Yeah.
So if you have a credit score below 640 and you're looking for a primary residence, I noticed you kept saying that. Is that because is there something we should know about investments? If I own a home and I want to go get another, I can't do that with FHA. I can't buy investment property with FHA.
No, no. Yeah, it's a huge stipulation. FHA is only meant for primary residency.
Oh, you should have led with that, man. We're about to lose 15 people on here. We're trying to figure out a way to get an investment property with 3.5%. All right, now we know. Sorry, folks, if that's what you were looking for. This is not
Yeah.
the place. This is for home. So you telling me, just hypothetically, you can't even go and buy the home and rent the home out. Like you have to live in the house. If
Yeah,
you're fine with that.
yeah, yeah. Unfortunately, again, FHA, it wants to promote home ownership. Right? It's not
Primary residence home ownership.
exactly. Yeah.
So no Airbnbs.
No Airbnbs.
Gotcha. Okay. glad we covered that.
Yeah.
Well, that's great for someone that, again, has a credit score, a down payment, all these things where they feel like this may be the best option for them. Because I know in another video we talked about some things relative to conventional loans. It sounds like those are a little bit different, some of the requirements. I think at some point we'll do FHA versus conventional to really do a
Yeah.
side-by-side comparison and talk about the pros and
Absolutely.
cons of those two, right? Yeah.
Absolutely.
Okay. All right. Well, I think I got enough on the basics here with the FHA loan. Did we miss anything about this? What are the closing time frames looking like with this loan right now?
Yeah. So for our company, we are very comfortable with 30-day closings on regular purchases, right? This is for FHA that we're speaking of.
Hmm.
Um, really, we're specialized in closing fast here at Fairway. So if Cedric said, Greg, I have a buyer that seller is purchasing a home where a seller is very motivated to get out the house, we can close in about 3 weeks.
Oh, 3 weeks again. Okay.
Yeah.
All right. FHA. So what happens with the appraisal then? How does that work?
Yeah, so great question. So FHA, I mean, unlike I would say other programs, they have their own standards that any house that they're going to invest in have to meet. Right. For example, um, um, I mean, there's chipped paint, right? There's windows not opening. Um, this could very well make the house not appraised.
Right. I've learned over the years that the FHA appraisal also includes an inspection component.
Absolutely.
And if you can't open up a window, that's a safety hazard, right? So,
Yeah,
if it's been painted shut or something like that. So I understand that the FHA appraiser is looking for issues that may be safety and code violations.
absolutely.
Yeah. So how would one overcome something like that with FHA?
Yeah, well, it's several ways. The obvious hope is that the seller would make the needed changes. Once that buyer's agent kind of sniff things out, if it's not already in the disclosures on the listing.
Hmm.
But I think that's the obvious. After inspection, of course, that always opens up opportunity for further negotiation.
Okay, speaking of inspection, now you got my brain working a little bit. What are the, if any, inspection requirements with FHA? In DC right now, folks are doing pre-inspections and waiving inspections altogether, which, that is a personal preference. But if people want to be competitive and use an FHA loan, what does that look like? What are FHA's requirements outside of that appraiser that does his mini inspection?
Yeah, yeah. So FHA, among all other loan types, is very, very particular. They're very stringent on just the house meeting certain guidelines. Again, it's the standards. And FHA is the lender, so it's we don't really get appraisal waivers for FHA. And normally, inspection does not have the capability to be waived as well.
Oh, so you're saying that it's best to do the inspection and not
Yeah,
wait if you use an FHA loan?
absolutely, absolutely, absolutely.
All right. Okay, that's good to know. That's good to know because it's really competitive out there, and people are looking for ways to get a leg up.
Yeah, yeah, yeah.
Yes, that's not going to be one of them.
Yeah,
Okay, it is what it is, man. Got to be safe.
yeah.
All right. Um, anything else that we missed just about the real basics on the FHA loans that people should know at this time?
Um, yeah, so we covered a lot, man. We covered credit, credit requirements, down payment, closing costs, inspection, appraisal,
Yeah, yeah, yeah.
loan
I didn't
limits.
expect to get into all of that, but yeah, we did.
I think we got a lot, man. Enough to give again the basics.
Okay. So everyone's situation is different. Folks want to get in contact with you. They have more questions. What's the best way to reach you?
Sure. So I am on social media at Instagram at the Mortgage Gentleman. I'm on Facebook, just simply Greg Lewis, Fairway Mortgage Corporation. Look me up. I'm also on Google pages, and you can now find me on YouTube with Mr. Cedric Stewart.
Oh, there you go. Okay. And we'll have your email and your phone number and all that good stuff down here so people can reach you if they want to go old school.
Absolutely.
All right, Mr. Lewis, I appreciate your time, sir. Thank you for bringing it back here for episode 2 of Home Loan Basics. We look forward to seeing you again soon.
It's always a pleasure. Thank you, Cedric.